presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great week, folks. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Market-wise, let's take a look at it out here. We have the Dow Industrials down 111, NASDAQ off 21, S&P's down 16, gold contract up $8.20, trading at $17.06 an ounce. You got silver up 3 cents, $15.71 an ounce, light sweet crude up $1.80, $25.94 a barrel, notes and bonds. We got the 10-year right now up 10 ticks, trading 138.30. The 30-year up a full point plus 9 ticks at 179.25. And King Dollar. King Dollar down 317 ticks, trading 99.919. The euro is at 108. The yen is at 107.26. And the British pound is at 122 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. Let's go over to the future market first. We'll take a look at the E-minis. E-minis out here, folks. You had a high out here at 10 minutes of 10 this morning, 29.39. Bottom line, you're 29.05. This is pressing the bottom of the range that it's been in all day, and I suspect we're going to be right down into this 28.99 once again. We just hit that about 30 minutes ago. I suspect we're going to be down into that area once again. We take a look at the NQs, which no doubt continue to be the strongest indice out here. They got up to a high today of 93.45. Right now you're at 92.62. So the bottom line is that they are not holding price. We go take a look at the SPY itself. And what you're going to see, we've been up at these levels. And the bottom line, if we take a look at the SPY's laying at the same level that we've been at here for about 2 weeks right now. 294.88 is the high. We hit 294.24 out here today. We had anemic volume out here yesterday, by the way, folks, and it was 79 million. We're not going to even do 79 today as I try to get into that high. We actually, let's see. Yeah, we get over the high. That's going to set up another failure in price, failure in volume. NDX 100. We take a look at the NDX. The way the NDX is set up right now, the three Qs up here. That has been up on air also, but the bottom line is up, trying to basically get to its highs. The highs in the NQs are 237. We made it up to 228.09 today. The high of yesterday was 227.93. And 26 million, and that's also probably, I don't think you're going to get 25 million shares, or 9 million shares, rather, into the close. So more than likely that's going to set up failure on price, failure on volume. Gold contract out here, we're trading up $8. We hit 16.93 was the low out here of the range today. 17.16 is the high. You're building cause, folks. The bottom line, you're staying above the trading range. You're in a new trading range. You get an ABC structure up with about an 18, 20, 25 handle out here. We're going to take a look at the note and bond market. Notes and bonds. First, we'll take a look at the 10-year note. What we have out here inside the 10-year note right now, it's trading up 9 ticks. You get 1 million contracts that are traded out there. That's actually just a sideways move with light volume. That's how that baby is set up. What we do have out here today is that the Feds this was the first day that they're in the ETF market for the mortgages. Bottom line, yesterday they bought $250 million. We'll see what they end up buying out here today. Dollar index down 306 ticks. We are trading 99,920. Now, what's going to get really intriguing out here, folks, is this. Let me show you this for a second. Okay, so here he goes. Oh, no, that's going to be the, 1 second. Because what we have here is that you have the largest fund in the world that is going to be selling $37 billion in equities. And what you have here, this is in the Netherlands, and the bottom line is that this is this is the heaviest owner of equities in the world, folks. And if you happen to be watching Tiger TV, I'm putting up here, this is their portfolio. Okay, so the portfolio is in the trillions. These are the largest positions. So what you have happening here is that the whole universe of money managers are going to be saying, okay, what are they going to sell? Because it's very unusual. That's how this thing shakes out. The bottom line is that when you have one of the largest owners of equities in the world basically saying that, okay, they want to sell some of these equities to get cash to do other deals. Hey, we'll see how this baby shakes out. But if you happen to be watching this, the largest holding is Apple. This is quite a portfolio, man. Just check this portfolio up when you take a look at the largest holdings. It's pretty intense. The top 10 holdings represent a 9.65% of their whole portfolio. And Apple's number one. They get 45 million shares of Apple. They get Microsoft. They get 75 million shares of Apple. Microsoft. They get 6.6 million of Google. They have 75 million of Nestle. They have 4.2 million of Amazon. They get 19 million of Roche Holdings, 205 million of Royal Dutch Shell, 27 million Alibaba, 25 million Facebook, and 55 million in Novartis. So you're going to be hearing about this left and right the next few days, because the bottom line is that what the financing world is going to want to know is what are they selling, because that's going to put pressure on those equities, folks, in a big way. That's the bottom line, because, of course, once you start selling something, the real question is, who's the buyer on the other side of it? And in this particular case, what is pretty wild, actually, is that they basically, when you look at a lot of those equities in their top 10, those equities have made quite a run back. There's no doubt about it, into their highs. That's how this baby is set up. If we do go into the NDX 100, the bottom line is that NDX reached 93.54 today, and you reach 93.54. You're going all the way back to February 7th, which is pretty amazing. Stay right there, folks. Come back with our man, Mr. Jason Path. We're going to be talking travel, dining, movies, mortgages, malls, bonds, energy, all of the above. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The
gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 171. Nasdaq is off 51. S&P's down 24. Let's go over to our man, Mr. Jason Path, as we do every Tuesday and Thursday at 1:15. Jason, what's going on, brother?
Tom, not much, man. How are you?
Great, man. Great. Well, listen, I'm looking over your notes here, and what I can't quite understand is that when we start talking travel, dining, movies, and mortgages and malls, as we talk about them, they're having a tough time, and the NASDAQ was almost at its highs, man.
That's right. It's interesting, even the divergence between the indices, as we've talked, as everybody can see. I mean, if I look at the S&P, the rally that we've had over the last several weeks, it just feels out of gas, right?
Yes.
I don't see any momentum. I see no cause for momentum. But the NASDAQ tells me, again, I say it, and it sounds so simple, and it is simple. Money has to go somewhere, and a lot of those big tech names are still attractive in such a uncertain time.
Sure.
People are still going to be online. They're still going to need to advertise. We're still going to use Microsoft software. But clearly those names that are sensitive to anything to do with the consumer and the traditional consumer-oriented service economy. Again, the term I continue to use is just radioactive. I don't know how...
Yep, there's no doubt. And, since last week, you brought this up, and I thought this point here was, phenomenal because, we've been talking about it all week on the network. And what it's about is, your first topic, travel. Because the government didn't shut down travel. We decided not to travel, right?
That's right. I mean, I'm on the phones with guys today saying, hey, when we can all fly again, it's like, we can fly now. We just don't want to.
Yeah.
And the other piece, I do not believe folks have thought through well enough. Again, simple concept, but you really got to spend some time gaming this out, is all of the secondary, third order, fifth order effects of that.
Right.
The businesses that depend on, airports, travel.
Sure.
It's just a huge cascading effect. Again, even in oil markets, we talked, last week, material double-digit percentage of oil consumption in this country is jet fuel. And that's just not coming back for years.
Right.
We're at 10% right now where we were this time last year in air travel.
Well, I'm looking at this number you sent over. So listen to this, folks, okay? So on May 10th, there were 200,815 travelers compared to a year ago of, 2,419,000. I mean, that's pretty intense, man.
That's right. And we've been consistently between 190 and 200,000 on a daily basis. So it's not like it's getting better as we progress through the virus. It's just not. And, as we see a rally start to run out of steam, unemployment continues to escalate. For the second half of the year, anything sensitive to the consumer from an equity perspective, I personally want to stay away from, because it's going to get worse economically.
Yes.
Everything that we've responded to date has been the shutdown, right? None of us have seen the effect yet of 25% unemployment. And by the way, none of us have ever been alive in an environment where we had 25% unemployment. Hiring is not picking up.
No, there's no doubt. Well, it was interesting. One of the tigresses in the den was just saying, do you think that when the Apple stores open up that everyone's going to go and buy an Apple phone? Now, what's so deviant about this, folks? I can picture that many people will, because what's happened is that you get the $1,200 stimulus, then you have the unemployment, and in Florida, people haven't been getting it. So when they get a check, they're going to get a check for $5,000, $6,000, $7,000. So I can picture at the beginning that because let's picture when we were kids, you didn't know that, okay, then the spigot's turned off, and then what do you do 2 months from then, after that? Do you know what I'm saying?
Yeah, that's right, yeah.
Yeah, and it's going to be the effects, folks, another 60 days, 90 days as to where this is going. Let's talk a little bit about mortgages. This is a big number you got on mortgages here.
Yeah, so mortgages and forbearance, we were at about 0.25%, right, 0.25% in the beginning of March. We're at 8% and rising now. The carnage in real estate, again, it's going to be a tail effect. The shutdown didn't necessarily immediately impact, residential or commercial real estate like it did restaurants.
Right.
As I look at malls, REITs, mortgages, those, again, the unemployment hit us so fast and so hard. It hasn't been gradual like we saw in 2008. I think, 60 days from now, real estate is going to be really toxic.
Yeah, right. Now,
residential and commercial. I don't know if you saw, it just hit the wire right before it came on Twitter, just said employees are going to work from home forever. Right?
Yeah.
Is that the last time we're going to see that from a Fortune 500?
Right.
I know that's not residential. You ask for residential, but residential, commercial, what that does to the bond market, it's just going to restructure the whole thing, right? And that's what's going to be so fascinating to you and I and others as we go through the next 3, 6, 9 months. The whole thing is going to reposition, because at the same time, on the back end, as you mentioned in the news update, you got the Fed now, buying ETFs, buying bonds, literally monetizing debt in this country, and that's just going to completely rebalance everything from a macro perspective financially in this country.
Right. And what Jason just brought up, folks, about Twitter just came across, they're going to let employees work from home permanently. This is permanently, folks, okay? And that's the commercial office building, man. Forget it, right? 1 second you're in heaven, the next second, let me tell you something. You start losing the Twitters of the world, the Apples of the world. That's why everything in San Francisco is $1 billion, man.
Right. And you want to talk about a bubble, right? So you just take San Francisco, right, which is a top 10 market in this country. But
yes.
Huge escalation in price, residential and commercial.
Right.
Right. Just massive double-digit annual escalation. And now you got Twitter. And by the way, it's such a competitive market for talent out there. Everybody's going to, we're going to see a cascade of announcements like this over the next week. That market's just going to collapse, right?
Yeah.
And, it'll come to places like Omaha or Dallas later, but you're going to see commercial just collapse. It's going to be painful to watch.
No, I agree, man. There's no doubt. Now the movies, you saw the rumor yesterday that Amazon, was looking to buy AMC. We'll see whether that's not going to happen. What do you think's going to happen in that business?
Yeah, it's a race to zero, probably accelerated by this crisis. You've seen a lot of folks be forced to go straight to the streaming platform with the release, because they can't monetize any other way. That was a bad business, in my opinion, over the last 5 years. Anytime you're subsidizing your basic economic model with $15 Cokes or $10 Cokes and $50 popcorns, it's just you're just taking advantage of the last tranche of consumers that you have. That, to me, that market goes to zero. I don't know what Amazon is trying to execute. They've also been rumored in convenience, or they haven't really executed on any type of retail storefront idea that they've had. Logistically, they're geniuses, the likes of which we've never seen. But I don't know that there's a lot there with the Amazon rumor. AMC could be obviously looking to sell, and if I'm an M&A advisor trying to sell, trying to do something with some assets, right? I'm going to float Amazon, the deepest pockets of the world. I don't see a lot to that.
We all want Amazon for business, right? There's no doubt.
I don't think there's going to be a transaction anytime in the near future. It's fun to think about, but
it's. I'll tell you, man. Between natural gas. Where we are at natural gas.
So natural gas has come off its highs, right? We got a huge swing trade between 165, 170, and 210. We reached 215 last week. We're back down around the lows. Weather's getting a little more mild. It was really cold in the Northeast. We'll talk next time. The natural gas equities have actually been the best sector since we hit the crash on the 23rd. Looks like CNX and AR up 100% in the last 4 weeks.
Okay.
We can talk about that next time.
Next segment, folks, Thursday, right here, 1:15. Jason, thanks so much, man. Have a great one. Safe one. Look forward to speaking to you Thursday. Thanks, man. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, folks. Dow right now down 190. You get NASDAQ off 74, S&P's off 28. And so this is pretty intriguing. We were just talking about the real estate market in general, folks, the office part of the market. Now, this is one part of the market that was definitely a hot part of the market for a long period of time. And what that was university housing. This story here, and this is in Gainesville. And if you've never been to see one of these big Florida schools, folks, these are phenomenal schools. For some reason, Florida secondary schools aren't the best, but their colleges are pretty intense, and they're great colleges. This happens to be in Gainesville. And this guy, they just filed bankruptcy, man. So the operator of a student housing complex built for the University of Florida students fell into bankruptcy. Now, this is going to be the largest municipal bond financed that is going BK. Now, they're still putting this together, folks. This was a luxury, high-end facility. Midtown Campus Properties sold 70. So check this out. This is what's pretty wild. $78 billion in unrated taxable municipal bonds in 2019 to build the 310-unit facility. Now, this was right at the highs, folks, when people were basically buying junk with basically nothing behind it, and this is you're going to see more of these. Bottom line, the mixed-use complex, whose website promised elite experience for students, with plenty of parking spots for scooters, resort-style swimming pool, fitness center, arcades, one-bedroom. So check it out. One-bedroom apartments, folks, they were going to get $1,380 a month. And if you've ever seen one of these one-bedrooms, the way they set up the structure, it's very efficient. And when you say a one-bedroom, these are very small one-bedrooms. And you can imagine when you start per square foot, start adding up like $450 per square foot, 450 feet inside of one bedroom at $1,380, you're getting some real bread. But guess what? What has happened here also is that, number one, the schools have shut down. Number two, online training. And then number three, and this is going to be the wild card right across the country, folks. And what it's going to be is that the amount of money that the students have actually paid the universities, there's going to be contentious deals on, are they going to get discounts because of the fact that, hey, listen, man, we're online, we're not using your facilities. The universities are still going to have to pay for everything that they got out there as the universities. So we'll see how this shakes out. But Midtown themselves, they have liabilities right now between 50 and 100 million. And the bottom line is that this dom that we're actually talking about isn't even finished. So I suspect this very well could be a case, actually, that as they were going along, someone basically hasn't done their job, because the fact of the matter is, why are you going BK before the place was even done? It does. Well, let's put it this way. It adds up because no one's there. What they may have been doing, the place was 30% leased. So what they may have been doing is actually taking the leases, bringing those back to the bank, try to leverage the leases. There's another accounting in here that I'm sure the bankruptcy trustees are going to go through, because what you do have is that the building itself isn't even done. The problem, of course, is going to be the aspect of the amount of bonds that are out there that will not get paid. That's the bottom line. Let's go over and take a look at those S&Ps coming into the 4 o'clock hour. And what you have out here, folks, is that this is the first time that we actually broke the lows that we've been trading in for a couple days now. That number is the 2880. Well, this is crazy. It actually went right to it. Look, this is amazing to me, that when you're dealing with large numbers, that you can actually do a test right to the hundredths of one. And that's what we just did. So picture this. Yesterday the low was 2889.75, and that's exactly what we just hit. Now, that being said, the way we hit this, you had monster volume on the hit. So that's telling me that, we're at 91 now instead of 89, but it's telling me it's going to try to break that level. Pretty phenomenal, though, that it's set up with those higher numbers, and that can actually happen. We go over to the NQs, and we take a look at the NQs. What you have inside the NQs right now, from highs to lows out here, we've had quite a move. You just had a move of 145 NQ points. And in this particular case, we're not down to the lows yesterday. Yesterday, inside the NQs, you had a low out here of 91.18. Right now, we're at 92.04. So bottom line is that let's go inside the NDX for a second and see the strength versus the weakness there. So NetEase is the strength out here. That's up 2.5%. JD.com's up 2.1%. Taken away from it, Ultra Salon is down 6.8%. You get United off 4.8%. Micron's down 4.2, and Citrix is down 4.4. Let's go over to United for a second. I want to look at this again. So United down $1.17. Yeah, this is going to 22.38. You get into 22.38, it's going to be going after $18 once again. UL Ultra Salon, I'm going to take a look at this because what you do have, that's down 16 right now. Ooh, that's got volume too, man. So what's happening there? So this thing wants lower price. That's interesting. So then you're talking 189. Now, what's intriguing about Ultra Salon, what can be happening here, is that this is a large box store, huge amount of overhead, number one, huge amount of overhead, but also huge amount of profit spread on what they sell. Now, that being said, you can see Ultra Salon 2016 did $3.9 billion. Last year, 7.4. Now they're looking 6.9. So they were contracting from last year anyway. That being said, I can see how they could get a nice bump up across the country, selling more, buying more product. Well, us buying more product off of them because of the fact that so many salons were basically shut down. What's intriguing out there now, as the country opens back up, I expect they will back off. Market-wise out here, they're backing off quite a bit. There's no two ways about that. We got to take a look at the dollar. This dollar is going to get interesting because each and every time that we get up to this 99, like 870 area, just can't handle price, man. You know, so the consolidation, the top of the consolidation is like the 100.867. This couldn't handle price today, so this is also saying once it could go back down the other side. Now, that being said, what is going on is that the British pound, okay, basically is getting sold away today. Now, the euro, no doubt, is, you know, what basically really moves the dollar, but the pound is at the lower end of a little consolidation. We're at 122.84, and 122.48 is the bottom of that consolidation. You break that consolidation, and you can get down to that like 114 area. So that would be quite a move if, in fact, that's where this baby is heading. Dow Industrials right now down 250. NASDAQ off 102, S&P's off 35, gold's up by 560, notes and bonds, sideways a move again in the note and bond market, plus 10 for the 10-year, plus 1.10 ticks for the 30. Stay right there, folks. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's down 310, Nasdaq's up 123, S&Ps are up 41. We were talking about that S&P, folks, okay? Bottom line, you just broke the consolidation. We're at 28.81, and this thing can get down to 28.68 in about a heartbeat. So we're down 41 bucks. I expect what you're going to see coming into the close out here will probably be down about 60 inside the S&P. Dow Industrials down 300. You're probably down 400. Let's go to John in New York. Hey, John, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
Good.
What are we going to look at today?
You're a precious metals expert. Ridex Precious Metals Fund.
Do you own it right
now?
now?
Look at the top 10 holdings.
Yes.
And would you recommend buying it?
Yes, I would. Do you own it? Are you looking to buy it?
I just have a little bit. I'm thinking of putting more in it.
Okay, so check this out, folks. This is cool you called on this, John, right? So this is a Ridex fund. So the management fee is 0.7501%. Now check this out, man. The top 10 holdings in this, John, I'm sure you already know it. That's why I call them, are phenomenal, man. I mean, this is a good little scene. So you get Newmont is the highest, 7.7%. Barrick is 7.5%. First American Government is 6%. Now that's cash, okay? So they're holding, they keep 6% cash, which is really smart. Then you get Franco-Nevada, 5.7%. Freeport-McMoRan is not that great, okay? But my take is that that's off the lows and you'll see a higher price, okay? Then you got an Eagle. You got Wheaton Precious Metals, folks. So Wheaton's at all-time highs right now. You got Franco-Nevada at all-time highs. Then you got Anglo-Ashanti. That's moving because of the fact of the Rand dollar versus U.S. dollar, and then you get Kirkland Lake Gold, man. This is a nice portfolio, man. Yeah, and that is 54% of the fund, John. So yeah, to spread your risk out, I think it's pretty intense, man. Yeah.
Okay, thank you.
Okay, man. Have a great one. Have a safe one. And what does happen there, folks, is that when you start looking at some of these a portfolio like this, okay, it's pretty cool because that is the aspect of the, if you get one that something happened to, the bottom line is that you have 9 others that are very good positions in that basically can keep that portfolio moving higher. Good setup, no doubt about it. I had talked a little bit earlier about the aspect of Norway and how much they're going to sell out of their portfolio. And if you start looking, and this is where it's going to get really intriguing, folks, okay? Because there's probably not an equity that you can pull up that what happens when you pull them up on the Bloomberg, it goes under Norges Bank. That's what it goes under, okay? But what it is, it's the government pension fund of Norway, which is the largest owner of equities in the world. That's their, the oil keeps going back in there. When you actually, what's really wild about this? When you actually take the number of people that are in Norway and then take the amount of money that is in the fund, okay, it's a monster number. It's pretty cool. But the bottom line, my point here, even inside the gold market, they own a lot of gold stocks. It's so big they have to own everything. When I first brought it up, I brought the aspect of what was the top 10 holdings. The reason I was doing that, I suspect that the top 10 holdings, they're going to be kind of paranoid about, are they going to be selling off into a market. We go over to the S&Ps again, we take a look at it there. This is accelerating. This is a little steamboat, folks, that's accelerating right here. And right now you're at 28.76. I'll just show you where I just got the 28.67 number. The 28.67 number, folks, is a high volume low that was generated out here on May 7th. That's where this baby come from. Now, that's one way of doing it. Let me show you another way, though. That actually says it's going to be a lower price. When you do a consolidation, I'm doing this on a 10-minute bar, but what has happened is this. The S&P, as well as the NASDAQ and the Dow, they really were going sideways, and they were holding price every time that they came down to the bottom of this short-term consolidation. When you break a consolidation, whether you break it topside or downtown, a measuring stick, just fast and furious, is that you can take the bottom of the consolidation, which is 28.90 approximately. You take the top of it, which is 29.37. So 28.90 to 29.37. Okay, so you get 47 points. You can take 47 points off the bottom of that, and then you end up with 28.42. And then what I do next is that I go over and say, okay, find me a high volume low at the bottom. That's why I come up with the 67 versus the 42. I suspect we'll get down to that level. Then what would end up happening, in order to break it, you'd have to build a little cause. What happens in markets is that you're just not going to go down to that volume characteristic and basically most times just blow through it. Particularly if you're talking to the S&Ps and you've just come down 10 or 15 points, you're not going to come down there and blow out a huge range in a big day. The reason being is that it's used its energy getting down to that level. Most of the times what you see is this. It'll get down to the level, then you start going back and forth, back and forth, back and forth. That's the building cause to go to the next level. That's how markets like to work, folks. If you correlate markets to energy, because that's all they are. It's your energy, my energy, everyone's energy, that we're either buying or selling. That's how they work. And then these big spikes, whether they're higher and or lower, are really important, because that's where the fear on the way down or the greed on the way up takes place. And this is where what you can do is you can take all of our minds, you simultaneously put them together, and the real question is, okay, that is the aspect of a consolidation. So it's pretty cool when you basically look at markets and then see how we're all thinking simultaneously, and then how the larger players at all times, this is what they're trying to do. The larger players at all times are trying to bust lows and bust highs to find out, at the lows, are there more sellers? And if they bust the lows and then there are no more sellers, they know, okay, we're going to buy now. Because that is saying, when there's no more sellers, it's very easy to drive markets higher. When you're at highs, and they'll bust the highs, and you don't have momentum after that, that is saying that there's no more buyers. Because when you bust a high, there's plenty of folks that love, when you break a high, that is when they are coming in to buy. We see a good picture of this out here today of how this is shaking out. One of the main reasons I'd say that the acceleration is larger today has to do with the aspect that we've been laying at the same place for so long. When you're battling out for so long, what ends up happening is that whoever wins, the acceleration goes dramatic, because large players absolutely understand that, oh no, we just lost. So if they lost, they're not going to kid around. Bang, I'm going to sell that thing right now. Sell into it. Okay, it's just how markets like to move. Dow Industrials down 390, Nasdaq is off 163, S&Ps are off 51. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 403, Nasdaq's up 166, S&Ps are up 52. Let me show you something here in Apple, folks, okay? Because Apple, bottom line is that, we just went south pretty quick. And you can see the reason I brought up Apple is the largest holding inside the Norges Bank portfolio. And so, we had just brought that up. I said, okay, let's see, do we have larger sellers? Now, what you're looking at here is that you're looking at my screen, and this goes from the aspect of how these per trade is happening. And you're going to see, bottom line, a few minutes ago, you had them start coming into Apple at 14 past 3, 10,000. At 27 past 3, 10,000. Then this is where it gets accelerated. So you had 10, 10. Then at quarter of 4, okay, 10 minutes ago, you did 13,000. Now watch what happened. Between 13,000, that was when it broke its back. That's what ended up happening. It went from positive to negative, and whoever that trader was, most times it's be the same one, because this is pushing. It's unusual to get 13,700. I suspect they had more in there. But what that meant, when I was talking about, the buying and selling, what you would have had happen there is that at that aspect, they didn't buy everything that they had for sale. And as soon as that trader saw that, he says, that's it. I'm going on the bid instead of the offer. And they threw another 20,000 in there. That's how, when you're basically bisecting or dissecting, you don't know who the sellers are and who the buyers are. But that is normally when you're checking something to see, okay, how can something accelerate that quick? Well, that's how it accelerates that quick, that you have an operator that is turning around and saying, I want to sell, I want to sell. They're trying to put it out little by little by little. Then they realize they just broke the stock. And as soon as they break the stock, the bottom line, they're always going to have another 20 or 30,000. Okay, just move them. Just move them quick. Okay. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Come back and join us tomorrow. Tommy kicks us off. Great show, 8:30. Tell your friends to go to TFNN. Tell them to go to YouTube.